What's up, everyone? This is On the Brink with Castle Island. I'm Nick Carter. This week, we have a very special guest. Ryan Rabaglia was kind enough to come on the show. Ryan is the managing director and global head of trading at OSL, one of the largest digital asset brokerages in the world. They're based in Hong Kong. They're part of the BC Group, which is publicly traded in Hong Kong. So you've heard a lot about Tether on this series. You've heard a lot about crypto dollarization. We've had Paolo from Bitfinex/Tether. We've had academics explain how Tether price formation occurs. I wanted to get one of the participants right at the nexus of the crypto dollar markets. There have been a lot of those timing analyses which have determined that Tether is mostly used in Asia, and who better to explain the role of Tether in Asia than Ryan, who has an amazing purchase on them and pretty unparalleled insight into them. We talk about Ryan's journey from trading commodities and Forex to Bitcoin, how he's seen the financialization growth of the space. And of course, we talk about crypto dollars, the crypto dollarization of the industry, what that means, where it's coming from, where it's going, and some of the really interesting use cases for Tether. I think the Asian view of the Tether markets is pretty underappreciated out here in the West, so extremely valuable. For me, I learned a lot. Let's dive right into it.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion and all of a sudden people start to worry. So out of this worry, we have something called the Bitcoin.
So today we have Ryan Rabaglia on the show. He is the global head of trading at OSL. OSL is Asia's leading digital asset platform with arms in brokerage, exchange, and custody. They're publicly traded in Hong Kong. Ryan, thanks so much for coming on the show.
Thanks, Nick. Happy to be here.
It's we're exactly 12 hours apart, so it's the morning there, evening here.
We are. I feel so close, though.
When we did our first call, you were hitting the links. You're on the golf course.
I got slaughtered that day, though.
Oh, yeah? I felt a little jealous. I haven't played golf in a long time. I don't know when the next time I don't even know if golf courses are open here.
They actually are. I still got a big crew over there in New York, and they are Westchester, Long Island, I believe. The courses are open with some pretty restrictive rules, though.
Well, I guess you can be distant by its very nature. It's a distant pro-distancing sport. So I'm really pumped to have you on. I think hopefully we can cover some interesting ground today. For those who don't know you, could you give us a brief background on yourself, on how you made your way to OSL and how you ended up in Hong Kong?
Sure, can do. Appreciate like I said, appreciate the invite and being here. So yeah, I mean, I'm born and raised in New York. I started my journey down the rabbit hole in financial trading quite some time ago. Started out prop trading, U.S. equities, NASDAQ in Queens, New York, actually. That sort of, brought me in front of a few interesting characters along my journey. So essentially, we built out a team of 10 traders there in New York City, essentially doing sort of manual high-frequency scalping, or the rebate game, which a lot of you younger guys probably don't know of, or maybe have forgotten at this point. But there's a huge scene back in the day, trading equities, particularly very liquid NASDAQ stocks, some of them potentially on their way out at the time, but either or, hundreds of millions of shares being traded every day. So rebate trading, or scalping, it was primarily called. We built out a pretty solid group there of about 10 of us. We eventually gained some recognition doing that for a couple of years at a very small shop there. We raised a couple bucks, went out on our own, moved over to Broad Street downtown. And we sort of, formalized our group there. I think that was around 2005 or 6. Continued to play that game. The sort of the high frequency scalping game was still very profitable. We were responsible for doing up to sometimes 30 to 40% of a basket of stocks volume per day with about 7 to 10 traders. So pretty significant volume done. And of course, it was quite profitable back then. That's what sort of brought me over to Hong Kong. A lot of my group were Chinese Americans. So, I had a little bit of a close relationship to this part of the world early on. 2008, I decided to move out here and expand that company. It was sort of up and down. 2008, I think, if everyone recalls, wasn't a great idea or time in the world to go spend money, especially for a small shop. So I sort of set foot down here in Hong Kong in early April 2008, and things sort of just fell apart right then and there. Although our business is still good, everyone knows trading is sort of environment agnostic sometimes. Although it's tough to raise capital in that environment as well. So did that for another few years. Eventually, our growth plans sort of came to a halt, and we sort of gave up on that. Although New York was still very profitable, I eventually sold out of that and got into oil trading. Got employed here in Hong Kong for a publicly listed oil company, multinational. Singapore and Hong Kong were its two headquarters, physical done out of Singapore and paper done out of Hong Kong. So essentially we traded loads of, we run a prop book there as well for one of the owners and for the physical business. So Hong Kong being paper, we did a lot of crack spreads, 1, 2, 3 spreads, 2, 3, 1 spreads, RBHO spreads, calendar spreads. Essentially we were a spread desk. And hedging physical supply into Singapore, into Houston, and into all those other that Gulf area, as well as in the Middle East. But if you really boil it down, it was a prop desk, and there was quite a bit of risk on the table in that role. So super exciting. So I went from equities, and I also did a bit of FX execution in New York and Hong Kong on that same equities desk. So did from equities, which is exciting as a young trader, and then, into oil futures and swaps, some of it being OTC as well. Super volatile. Even the spread game is massively volatile. And we saw that unfold late this year with Corona and what it did to the oil markets. So I sort of dialed up my guys, and they're just shell-shocked. So equities over to oil futures, volatility on top of volatility. I sort of left that game in 2013. As few of us on the desk, sort of as I was working my way out of there, we found Bitcoin. So of course, Mt. Gox was the main exchange, or the only exchange really to get money in and out of. And I still do recall going down to the Hang Seng Bank on Devo Road in central Hong Kong here, filling out my form, for 10 minutes, wiring my $10,000. Hopefully it arrives at Mt. Gox on their shady site. A couple days later, I see it pop up. Bingo, I'm in. I'm buying crypto then. Not sure what it is, not sure how to hold it, although I did sort of get the bug and get the feeling that there was definitely something crazy happening here. So sort of as I'm tinkering around, punting around on Bitcoin, mostly holding, but doing some early scalping type of stuff, which I had some pretty good experience with. Made my way out of the oil markets. One of my good friends here in Hong Kong, who I used to socialize with, was sort of approached me, and I would see him out at the nightlife scenes here in Hong Kong. And this was mid 13, around there. He's like, "Hey, we're starting a Bitcoin exchange," and I always like to tell everyone it was a Bitcoin exchange, because no one calls it really a Bitcoin exchange anymore. It was a crypto exchange. So essentially, you only listed Bitcoin, and then when you listed Litecoin, everyone wowed. Or you had Namecoin or Peercoin. Those were the big dogs back then.
The good old days.
Yep. So he's like, "Yeah, we're starting up a Bitcoin exchange." I'm like, "Man, I've been punting around on this stuff for the last 4 to 6 months, it's been pretty good to me. I mean, it's small money, but the returns were fantastic at the time. He's like, I need someone to make markets on this thing because it's just going to be a bunch of dead orders flopping around on a book. He's like, I need something. So I went over there in late 13, and that exchange is called ANX. It's the first exchange created in Hong Kong. It was, sort of lining up to compete with the mammoth neighboring exchanges north of us in the mainland. And it was pretty much the only one that you could do USD or HKD fiat in and out of at the time. So essentially, started making markets there. I started doing even more arbitrage now because it was another liquidity source versus our friends to the north. And as you can imagine, some of the opportunities that existed back then, and I guess you could say they still exist now, but it was just a different time back then, and this was late 13, early 14. So that's sort of how I got into this, and sort of how we grew out this company since then. And of course, a lot has changed. From a staffing perspective, from a structural and organizational perspective as well, and just we've matured 100 times since then.
That's quite the story. So when you first started looking at Bitcoin, what asset that you traded did it remind you of, like, or was it something like completely new in terms of its characteristics?
I mean, to be honest, like when I got into the oil markets, it was, even just punting around on WTI futures is wild. You're talking up back in the day, your markets approach $100 a barrel. You have massive swings. You have your Wednesday evenings here in Hong Kong, which is your 10:30 a.m. In New York on the EIA numbers. Markets just go nuts. So, and you could put this across a number of different products or distillates. So, it didn't remind me of equities, that's for sure. And I didn't have a ton of experience in any other real products besides, it's called energy futures. So I would say it definitely reminded me of, my first couple days on the desk on that oil trading desk, and sort of not really knowing what I was doing. And people sort of, giving me the look over the shoulder just to make sure I'm not blowing the place up. It sort of reminded me of that. And of course, working for a public company, a multinational company in the oil business, there's a lot of controls in place as well.
Yeah.
So it wasn't a cowboy environment, but the market itself did definitely remind me of, or bring memories back when I was punting around in Bitcoin.
And when you first started trading it, was it just for curiosity's sake, or did you get at the time that it was like potentially this very important, idea about having this non-sovereign monetary asset?
Nope, not at all on the latter. It was just purely, getting into that GOX site, checking that pathetic little order pane where you input the orders, the order tickets, and the position, watching the position monitor, and the terrible GUI. It was essentially just it's like you don't care what you paid either, right? At the time, just because you knew it was going to potentially do 40% or 300%. So no, my original thoughts, and of course, I've grown up a lot since then, and I've invested a lot, of course, financially, but emotionally and mentally into this space since then. So I've definitely done a lot of growing up, but those early days, it was all just getting ready for that next punt.
Did you have the GOX physical two-factor key, the GOX branded one? I
actually didn't. I didn't have that, but a bunch of the guys, who I eventually wound up working with, 6 months later, so they did. And I honestly didn't even know what it was at the time.
I love that they had those. It's like commitment to a really narrow genre of security, and like complete, indifference to like the actual genuine security processes.
Absolutely. Yeah, no, I guess I wish I would have had that. I'm curious if you could get anything for that for
Yeah,
any value
it's like
these days. I'm sure you can.
it's a collectible now. All right.
Yeah, for sure.
So one thing I wanted to talk about with you today is the new phenomenon that's happening. So on the heels of this kind of dollarization phenomenon that is occurring in terms of the dollar just eating up other sovereign currencies, there's also a crypto dollarization happening. So primarily Tether, but also other stable coins are basically taking over, invading the block space for Ethereum, Tron, Bitcoin. I would say Tether has now really entrenched itself as the de facto kind of base currency for crypto markets. And this accelerated massively in March of this year, as you know.
Yep.
And so given, your centrality in this market and your expertise, I wanted to probe you on what you make of this growth of stablecoins, Tether specifically, since March. Tether has tacked on about $5 billion, almost $5 billion in market cap and monetary base, which is just staggering. So
Absolutely.
yeah, curious to just hear your view on potential explanations on why you think that might be.
Sure. So, pretty much the core strength of our company, is our brokerage business, and rightfully so. We've had this component of our business for quite some time now. We essentially built out the first OTC trading desk in all of Asia. This is going back to about late 15. So I've listened to a few of your other podcasts. I know of some of the other OG guys who built out some desks in your part of the woods, and those stories sort of hit home for me. And the point I'm getting at is we've had a pretty good sort of window into how things operate in this space for quite some time now. We've seen the wild things. We've been forefront with a lot of these different arbitrage opportunities. We're probably the biggest beneficiary of the kimchi premium back in the day. And I know a lot of the U.S. guys like to take a stab at it, but no one was in the backyard like we were.
Right.
Except for maybe some potential small time punters, but not on a well capitalized desk perspective. So this does give us a bit of an edge to sort of look into things and to sort of sort of spread our wings and say that we've observed these changes for quite some time. So I think it does give us a bit of insight into this. So what I'm sort of getting at too is zooming out, not necessarily just for this March incident where we did see this ballooning in from a market cap perspective. This USDT or Tether it's been on the climb for some time now, whether it be from a very visible perspective on a coin market cap refresh, or if you're talking about OTC trading, which we all know no one has true visibility into.
Right.
A lot of players, whether they ask for OTC volumes or media requests or whatnot, you rarely see it unless you get some inflated BS number from someone just to prop up their books and potentially get a good sale price. Who knows? But this market has been evolving for quite some time now. I'd be confident to say we're probably one of the largest Tether traders in Asia for sure. Globally, we're up there as well. And this is from a facilitation perspective, of course, just considering our brokerage business. So, we've definitely seen a change in behavior, over, I'd say, let's call it 2 years, maybe a year and a half or so, when this is really where we started to see more use cases start to kick in. And a lot of it has to do with arbitrage. I think previous reports or previous traders or whatnot have commented on the Bitfinex versus let's call it other spot exchanges. No need to pinpoint, and the availability of getting cash in and out quickly. Of course, that's the foundation. and specifically from Tether's exchange company, and banking delays and whatnot. It's always been easier to get USDT in and out, and there's always been a demand for it. And if you have these arbitrage opportunities, of course, then there's going to be an inflated component, from a volume perspective. So there's been this evolution for quite some time now, and only until recently, as we sort of now zoom back in again, have we seen an expanded sort of let's call it list of items that people are sort of checking off when they say, how can I use Tether? So beyond pure arbitrage, there, and I could dig even deeper just on the arbitrage perspective. It's essentially, we're talking, if we want to talk about the focus of using it is sort of that base currency pair, of course for BTC, and of course because no one wants to get into banks anymore, or the exchange they trade on doesn't have banking or proper banking, and or altcoins, of course. And this may be a question you might get into. I might front run you a bit here, as far as using Tether as that base currency pair rather than BTC, which is what pretty much everyone was doing for quite some time. So this has brought a ton of more liquidity into the market, and a ton of sort of more need potentially from a minting perspective as well. So can dig a little bit deeper into the arbitrage, straight up arbs, let's call it the USDT USD pair. The market is massive for this, and I also see a lot of comments and posts about on exchange Tether volumes are dropping. It's to me it's meaningless. Of course, there's a play or there's a case to be made, as far as altcoin altcoin. Let's say attention being drawn to them. Altcoin markets haven't been amazing as of late, except for some spotty trades. But there hasn't been that much to go on, from that space. It's purely been on an arbitrage front from what I see, and it's all OTC. So whether divulging numbers or not, which you don't really see many people do, like I said, unless they want to give themselves a little bit of a boost, publicly, the market just for the USDT USD ARB has been massive, and it really kicked in. Let's call it earlier this year. I'd say even before March, to be honest.
And so, what do you mean by the USDT USD ARB? Because when I'm thinking about Tether, it doesn't trade at that massive a premium to the underlying, or I guess it did for a few weeks in March, but it's close to par right now, right?
You're right. It is. I mean, it's. We like to joke here too, because we have differing opinions here about Tether within the office, but of course everyone wants to make money in a very risk conscious way. The arbitrage opportunity is not great, but you'd be surprised what people would arb, and the thin margins that we've sort of become accustomed to here in this space, and any other OTC desk will confirm this, of course. Just the complete compression of margins. It's been astonishing. Everyone sort of called for this to happen a year or two from now, and it wound up taking 6 months. And of course, the amount of desks that's opened in the last year or two has been astonishing as well. Some of them, you wonder why anyone would enter, this compressing margin state that we're in, with limited capital and whatnot. But I guess as you view opening a desk up, it seems simple enough. You just punt around and you get some clients and you make some spreads. But of course, those desks wind up closing eventually. Banking is near impossible to lock down if you're that smaller player. Maybe in the U.S. not so much, but anywhere else in the world, it would be almost impossible to get banking and to keep facilitating trade 24/7. But that arb, you would be surprised. You'd be very surprised how certain traders, particularly in this part of the world, have extreme faith in Tether. Now, I know there's been plenty of papers written about it. Of course, there's been plenty of articles written about, people not believing what it's backed by. We don't need to go through that. But in this part of the world, particularly, the average trader has more faith in Tether that potentially than they do in Bitcoin. So,
Wow.
Yes, it is that shocking. And I'll tell you the truth, to trade for a 1 or 2 or 3 BIP arb, they would do it in a heartbeat. Essentially putting millions on the line as well.
And with that accumulated credibility, is that just a function of longevity, or is it a function of Tether having returned to the peg after these various crises in its history? So like sort of an anti-fragility, or is it just a confidence in the issuing organization in Bitfinex?
That's a great question, actually. I sort of lean towards the anti-fragility angle, because each time, and time again, it's almost like every time the next little wave of news comes out around Tether, I'm like, here we go again. It's that time again. The market gets its shock. People start panicking. It trades at a discount for an extended period of time. But that anti-fragility, and I love the way you coined that there, is it's a huge opportunity for those believers.
Yeah.
Right. So
Yeah.
there's because no one trades small in this pair. Unless they're running some sort of business off the back of it where they need some stable coin or they're redeeming. This doesn't fall under the arbitrage umbrella. When I'm talking arbitrage, $2, $3, $4 million minimum per trade, up to 5, 10, 20. And some of these guys can barely scrape this money together. They go out on a ledge to get the 2-3 bips. So when the pair sort of comes under pressure, and you have that exaggerated sell-off, quote unquote exaggerated, because there is a real fear that you could lose 30% on it. Who knows? So and 3% would crush a lot of those guys. I would say, when that opportunity, is given, and you sort of have that faith, and unfortunately, I'm not sure you could build businesses on too much faith. It's an opportunity of a lifetime for some of them. And essentially it's just a punt. And that's what we see here. And you start to see volumes increase. Of course, once you start trading outside of that band, all bets are off. More legitimate players, we're not riding it and wait to see it come right back up to the top. Absolutely not. You can't take that risk.
So counter trading the confidence crisis, this has been a successful trade historically, and I guess that has inculcated the faith in this asset.
It has for sure. I mean, of course, you could look at it from a liquidity perspective too. I mean, like you said, we saw a massive bump up. I mean, previous to even the March bump, the market cap was extremely healthy. And
swelling,
recently it even went to absolutely. So, and you compare that against a USDC. Let's just take that. I mean, the market cap is 700, 800, I believe.
Yeah, it's
around there.
It's less than 1/10 of Tether's. Yeah.
So, as much faith as people have, like in the, let's call it USDC and the organizations behind it, of course, rock solid. Paxos as well. There's no opportunity though. Let's call those true stable coins.
Right. Right.
Yep.
And is there, in terms of the credibility, which is kind of a strange way to put it, but is there an element of believing that Tether, the organization, would resist regulators or kind of go to bat instead of just rolling over if there were requests to freeze the coin? Is that part of the reason people trust the thing, or this notion of a lower likelihood of being frozen in like a case of duress?
I think that's a great question too, and I think it's sort of tough to answer that one. You know, considering what we've seen, in the past, I think, each time, and this is sort of my play into the last question as well, is, each time we've seen, these situations of duress, it's particularly with Tether, you know, we've seen the resiliency, right? And we haven't the organization behind it itself has been pretty, pretty steadfast in their belief, in that, in what they're doing is right, and they haven't done anything, in any correct manner. Um, I would probably tend to believe that they would go to bat. They wouldn't roll over. But who am I to say on
Yeah.
that? I mean, that's a tough call. There's a lot of money. You know, fighting the U.S. is never an easy battle. As we've seen recently with some other projects, as large as they are, regardless of where they're located, there's the intimidation tactic as well, which is enough to make people roll over, of course. I mean, and let's face it, they've already made so much money, over the last 10, 7, 8 years, however long it's been.
Yeah.
There's there could be a potential for that event to happen where they do roll over, but for some reason, I just don't think they will.
Yeah, they seem to be going from strength to strength. I guess, well, there's still this NYAG situation. So in terms of replacing BTC or substituting BTC as the base currency for the industry, we've seen this happen on exchanges. So all those pairs that used to be altcoin BTC, it's now altcoin Tether. We're seeing synthetic products being quoted in Tether. Is this like basically the end of Bitcoin is like the reserve asset for crypto? I mean, like, does Bitcoin have a role there anymore, or like it?
Yeah, well, there's no way that I could answer that and say this is the end of Bitcoin as a reserve. I can't play along with that for sure. But I would say the data would go against us in that manner. Um, so no, I would say no, it's not. Of course, there are some outstanding issues as we just spoke about with Tether.
Yeah.
Whether or not those sway left or right, that's we'll see how that pans out. Until then, I do think that we do continue to see this trend. I do think the market cap of USDT continues to swell, considering the market that we view here every day, and other use cases that we of course have come across. I don't believe that it is the end of the BTC as a potential reserve, though. Absolutely not. I think there's, I think there's room for more than one. But at the same time, at this exact moment, considering what's going on with all these different arb trades and the lack of sensitivity towards higher profit margins for these particular traders, I do believe that this trend continues as we see it, as long as, of course, there's no external forces that come into play. I'd say the probably initial resistance from some of the more key, let's say, quote unquote, traditional guys who've been in this space longer, to actually deal in Tether, to list Tether on exchanges. I wouldn't doubt that starts to fold as well. I wouldn't doubt that you start to see other exchanges start listing it, and they start pairing other of their main tokens up with it, and it goes beyond what we've seen already. Because currently we know Bitfinex, we know some of the more, sort of let's call it more cowboy type of exchanges. They'll easily do things. They'll easily pair stuff up against Tether just because they know the volume's there. They know the liquidity's there. They know the traders that trade on that exchange. They will come. They will deposit Tether. I have a feeling that you're going to start to see some other exchanges start doing it as well. Ones that have been a little bit reluctant to do so as of today.
Was there something about that March 12 event which was like a trigger for this like this kind of normalization of Tether? Because like I've noticed the same phenomenon. It's like people that previously were super dismissive of the asset, I eventually just came around, maybe not wholeheartedly, but there's something in the resistance to Tether as like a valid asset, which seems to have decreased recently.
Sure. I think it's a good point as well. Does it stem exactly from that data? It sort of seems like it has.
Well, just by the numbers, right? I mean, like that was when Tether started printing 200, $300 million a day in terms of new issuance.
Definitely not a small amount. Yeah.
So like I'm trying to pinpoint like why that extreme volatility day would have, caused more demand for Tether to materialize.
Well, I mean, I think for myself, probably if you zoom out a bit again, it's more of a stablecoin play in my thoughts here, and I think a lot will agree with that too, and that's a pretty common topic of are stablecoins going to be replacing or be a dollar substitute, which of course that's what they're intended to do, and to make things easier on ourselves and others in the industry for as far as transacting and moving funds around. But that particular date, was it the catalyst? Like you said, certainly seems so from a numbers perspective. Why Tether in particular, though, is the main question, right?
Yeah.
It's because we didn't see a massive ballooning in USDC or PAX.
They grew, but
So
not anywhere
exactly,
near as much.
exactly. So I think it plays into this rhetoric that I've been sort of spitting here as well too. Is this this potential need for a more liquid US dollar substitute that sort of reaches the masses. And when I say masses, I mean who is the key contributors or traders in this space, and where are they operating from, and in particular, and which one potentially gives you a potential capture some margin as well. And it is Tether, and it always has been. And like I said, our volumes here on the desk have massively grown since, like I said, close to 2 years ago when we started really hammering away at it. It's definitely always been, an attractive play for a number of our counterparts. And like I said too, and like you said, it sits at par. You trade a premium, you trade a discount from time to time. So if indeed you do have that, that catalyst type of event that we're speaking of, combined with a potential opportunity to play the angles along the way, I think something like Tether actually fits both molds. It gives you that USD stability. It gives you that gateway into those other pairs. It gives you that potential ARB opportunity. And like I said, you don't need much of an ARB. You really don't. When people are viewing it from afar and they're like, there's just not enough to play there. I'm telling you right now, there is.
And then, like, in terms of like non-crypto use cases, have you seen any evidence to support the idea that Tether is actually being used in a transactional context outside of the crypto industry for regular like B2B payments?
B2B payments, I think so too. I mean, this not necessarily from our desk's perspective, but there's a number of use cases we've taken note of. A few of them, one of them being, of course, e-commerce, where certain parts of the world call it our region here versus, I don't know, somewhere like South America. There's obviously a lot of business that's done between those two regions, and of course every other region in the world does a lot of business with this region, but in particular, let's just point out those two. And there's a substantial amount of e-commerce being done, and settlement in crypto is extremely sort of running rampant. And I think this is something that for all of us who've been in the space for quite a while, and the old adoption talk that everyone has, and when is adoption coming, I think we've sort of given up on it. But we chat about it here and there. But this is true adoption. Whether or not you really want to raise the trophy and say, we finally did it, boys. I wouldn't go that far. But, this is true adoption. It is truly being used, and this is a very good use case for it. If another one that sort of has been surfacing for quite some time, and this is a little bit of a, I guess a little bit less spoken of use case is, in online gaming as well. So you have Southeast Asian, call it a Southeast Asian gaming site. They need funds in local currency onto their site. You have users in other parts of the region here, not necessarily in Southeast Asia. They want to partake in that site and use their services. They send USDT into that site. That USDT is then converted back into that Southeast Asian currency, which helps facilitate the all-around flow for that operator. It gets the user onto the platform as well. So you actually have two sides, and all of this plays into the volume spike too. I like to say it plays into the whole extreme minting scenario as well, which I'm sure it does. But there's plenty of Tether on the streets as well. So this other use case, where you actually see two sides of it. You see the end user accumulating or obtaining Tether. Then you actually have them, the end user being the operator, cashing it out as well. So you actually have two sides of it in two different fiat currencies. You have players in between. You have a potential arbitrage opportunity there as well, even on an FX front. So you could see how this just keeps spiraling.
Yeah, and it's interesting to see that like the distribution of sovereign currencies that stablecoins are pegged to is, I don't know what the percentage is, but 98% dollars as opposed to any other sovereign currency.
Sure. I don't know the number either, but I'm not surprised.
It's just the overwhelming majority. There's some gold, you got Tether gold, Pax gold now, which is kind of interesting, but it seems to be dollars. And, I guess the dollar depreciates at a slower rate than other sovereign currencies, but I'm also kind of shocked that it doesn't mirror the kind of global distribution of sovereign currencies, like people ex-US are still trying to get access to dollar-denominated risk as opposed to any other sovereign currency, even if it's a local one.
Absolutely, of course. I think that viewing the U.S. from afar is always a completely different picture. Me growing up there and living there my entire life and being here in Asia for 12 plus years now, completely different perspective on the world. And of course, a lot of Americans or U.S. based friends or associates or whatnot, or ones that travel quite a bit versus ones that don't, or ones that have lived overseas versus ones that don't. You always see this massive divide in what people actually see from the outside. It's very interesting. Unfortunately, it's not always very positive. When you actually get a real look under the hood, and you start to talk to people who haven't grown up there, or who haven't, or don't appreciate certain things about it as well. And that gives you a look inside of, just the control that the U.S. has, through exactly what you're talking about here, through this, let's call it this mechanism of, this perpetuated, I guess you could call it idea, that that it's sort of needed. It's needed outside of the U.S. It's a blatant fact.
I guess it's interesting that you have finally a way to get exposure to dollars and all the benefits that entails without the control that's exerted through the traditional banking system. So potentially the best of both worlds in this case.
Could put it that way.
So Ryan, it's been a pleasure. Where can people follow you? You're on Twitter, I believe.
Yep, I'm on Twitter. It's actually the only social media site I'm on, at Markets Maven.
Okay. All right. Well, thanks so much for coming on the show. Really appreciate it. It's been an education.
All right. Thanks, Nick. It was great getting to know you as well.